Welcome traders to today's webinar event. I'm your host, Sean Kozak, president of NeuroStreet's Trading Academy. And I'd like to talk a little bit about today's market profile webinar. We're going to be going over the full day trading system that we trade inside of our trading room. And the primary focus for the discussion today is teaching you how to trade key levels of interest. Technically, these are institutional profile levels using multi-time frame profile analysis. And we're going to show you how to locate levels on a higher time frame and then teach you how to go down into the smaller time frames to manage risk using order flow, momentum, and auction theory. And we got lots to teach you today because it is a full trading system event. So if you have any questions, just write them down, or if you're not able to stay for the entire webinar, please note that we are recording this event. We will send it out for you to watch after today's time. And please note that I do encourage questions. If you have any questions or you want to ask, details on the topic at hand, please note that I will be spending time at the end going over Q&A. Okay. So as always, I do need to cover a disclaimer. It is required by industry regulation. If you have any questions associated with the risks in the business, please don't hesitate to contact us and we can put you in touch with legal. Okay, so in order for us to stay on track, because I'm a firm believer that we learn in a series of steps, and just like any good presentation, we need to have an agenda which allows me to stay on topic, especially going over the details that we need to cover today. Okay, now before I go into the details of our agenda, can anybody in here tell me if they're completely new to market profile or volume profile? If you're new to profile trading, just type a new in the chat box. If you're experienced, just type an EX or an E in the chat box. That allows me to kind of gauge the audience and help me cater my discussions when we start going over the demonstrations later in the event. Okay, and if you're in between, then just put BW, between, right? So I want to talk a little bit about a personal pledge that I usually start with, just to kind of give you a little bit of background on myself. And we're going to segue into why teach trading profiles, right? Why do we want to use market profile and volume profile over other forms of trading analysis, right? I'd like to go over the overview of the trading system that I trade in our trading room. And it is a full-blown trading system, right? We're not just talking about an add-on event today. This is a turnkey strategy bundle that allows us to be able to fully trade market profile and volume profile from a day trading perspective. And in order for me to teach you the use of those tools and the frameworks around the indicators, I have a four-step process. And I'm going to walk you through those four-step processes today, so that you understand what myself and the traders do every single day in our trading room. And then at the end of the event, I'm going to go over trade examples. I want to show you trades that were taken in the trading room today. I want to show you the fills, show you the timestamps on the charts. I want to talk to you about the different setups that we do trade, and then just give you that system, transparency, so that if anybody has any questions about application, we can share that with you in real time. At the end of the event, I'll go over system pricing and then get you into some identification process around the questions and answers and so forth, right? So let's carry on. So my name is Sean Kozak. For those of you that are new and just joining me, I am the president and lead instructor for the school. And I'm not here to give you any fluff or snake oil, traders. No false hopes. This is a business of risk management, and done correctly, you can really do very well in the financial markets. Done incorrectly, it can be catastrophic, right? And as your friend and as the president of the school, my promise is always simple, and I say this to every trader I speak to. I've been doing this a long time, and I've worked with over thousands of traders in the space. I do employ a team of developers, and I've been designing financial algorithms for just a little less under 10 years, right? So the answer is very simple. In order for me to help you today, in order for our school to be of service to you, you're going to need to learn a tool set, which means you're going to need to learn the indicators that we teach on. You'll need to learn the signature trades that we trade, and you'll need to master them, okay? What ends up happening is most of the traders that do very well normally spend a lot of time on trade execution and management. And then I'm a big I'm a big fan of studying your trades and paying attention to how to improve and how to increase the metrics for your performance. Okay. Now this framework, or this breakdown, has been a proven model. We do have a lot of successful traders, and we do have struggling traders, right? Let's get right down to it. In this business, traders, they progress on their own pace, on their own timeline, and not everybody gets it right away, and some people get it quicker than others. And some people struggle for years, and then they need to realize they need to ask for help. And then other traders, they're just starting brand new, and that's a good thing because there's less learned behaviors that need to be changed. But it all kind of boils down to this, right? You're here for a specific purpose. You want to learn how to make money. You want to learn how to stack the odds in your favor. You want to be able to understand the system effectively so that you can trust applying it in real time. And then you want to know how to do it effectively and be in a community of traders that are succeeding, right? Can we all agree that that's why you're here today? Just give me a yes if that makes sense to you, and if everybody's kind of on the same page, right? Excellent. Ricky says yes. Anybody else? Elena, George? Excellent, guys. Okay. And I always like to kind of discuss this prior to the intro because, we all have the best of intentions. It's what we do with those intentions. It's the action steps that really make trading very effective, right? And so a couple things. Many of you probably have a lot of market knowledge, which is perfect. It means that you spent time looking at charts, indicators, been to a lot of events, maybe read some books, etc. But we have to ask ourselves a very important question, and that's, why should we trust market profile or volume profile, right? Why not look at other forms of trading? Why would we look at this as a primary way to trade? And it's very simple to me, and I'm going to explain my philosophy around this. And it's the fact that it was introduced years ago by a gentleman by the name of Peter Steidlmayer, and it was designed as an intraday charting technique for exchange members by exchange members. So let me kind of repeat that. This form of trading was built by institutional traders for institutional traders, okay? And if we really want to get down to the nuts and bolts of it, they're not looking at a two-tick chart. They're not really focusing on the indicators that are in the platforms that we use. They're really focused on understanding the daily auction because they're moving large blocks of money around, and they're really not concerned about day trading risk. It's just the truth of the business, guys. As much as us retail day traders want to, try to argue with that concept or try to, play the devil's advocate, the reality is very simple. Any institutional trader I've spoken with, or any trader that's been in contact with, any buy side or sell side traders, they all say the same thing. They start learning profiles. If you went and worked for a big bank or a hedge fund or anything like that, they're using profiles like this. They're using other forms of trading on top of it, but so do we. But we need to have a backbone, right? Why do we want to trust this stuff? It's very simple. It's built by the big boys, and they're the market, right? We are fortunate to be able to come in and trade in an environment that they create for us. It's an amazing opportunity for traders that learn that perspective. And hopefully after today, you'll see why we have an edge using it, okay? So I want to give you an overview. The system that I'm teaching you today, it relies on what we call automated profile arbitrage. And the real goal of the system is, it's really a game of chess, right? Where are the traders, the big boys, getting ready to engage in trading areas of interest? And what's interesting here is you can trade the system as an intraday swing trader. You could trade it as a day trader or as a scalper, because the opportunity is open to providing counter trend, trend, and reversal trades. It just depends on how you play the levels. So a couple things I want to talk about is the goal for today is to teach you a backbone and then show you how to go down to smaller time frame day trading charts to manage risk. So we always start by using a higher time frame institutional levels chart. And then we go down to the smaller time frame. We teach you how to manage risk. Now, the truth is you need a strategy. And that, I don't say that loosely. I mean, if you're going to make money and manage risk, you don't just need an indicator. You need a strategy that produces a repeatable pattern every single day so that you can go and exploit that pattern. That's what a trading system is. It's not just a bunch of indicators put on your chart to try to maybe give you a trade because today it's one way and tomorrow it's the next. A strategy means you have a system that produces an opportunity, and that opportunity can be exploited on a consistent basis with an edge around statistical analysis. And I don't want to sound complicated, but that's what trading is. It's a probabilities game, and it's a probabilities game around money and risk management. And if you have a system that can produce an edge every day and you manage risk effectively around that edge, you'll be a very, very successful trader. Okay? So in order for you to trade our edge, okay, and be able to trade our strategy, it involves 4 primary tools. Now, there are other add-ons you can add on, and you may have your other indicators, but these are the 4 tools that are going to be demonstrated today that make up our market profiles trading system. Okay, and it's very simple. Let me grab a cursor and I can teach this to you. Okay, this is our institution chart. It's traded on a 30-minute time frame. Why 30 minutes? Because that is the time frame that the exchange members created profile analysis back when it was created. Could you apply profiles on other time frames? Sure. We do it differently. We have a multi-time frame profile software that does it without having to change the time frames, which is one of the reasons why we have an edge. And we're going to teach that today. So you'll be able to learn that, which is perfect. The other 3, okay, these 3 charts are all about trade management. Okay. This is an order flow chart that specializes in delta spread analysis. Really, really powerful analysis. We're not just looking at the print. The print is too noisy. We're studying, we've built an algorithm that reads the impact of the delta. Some of you may have heard of volume spread analysis. We do things differently. We study the impact of the deltas and the impact volume has on the deltas. So we use that for timing entries. The auction curve looks at location. When you're managing day trading risk, it talks a little bit and it teaches you, okay, location. Whether we're trading in expensive territories or cheap territories based off of the auction theory curve. And the VMSystem looks at momentum confluence using a hybrid trading oscillator that looks at fast and slow momentum using velocity cycles and the MACD standard deviation analysis. Okay? So the goal for me today is to teach you how to use the profile software to find your trades. You need to know where to find your buy setups and where to find your sell setups. That's really today's objective, is to teach you why we want to buy and sell off the market profile levels. Then we're going to spend time showing you trade examples where we use order flow, auction theory, and momentum to time the trades from the institutional levels. Okay? That's exactly what we're going to be doing today. And the best way for me to teach that to you is in a step-by-step process. Because I could sit here and say, hey, buy these indicators. Yeah, they're amazing. And all that selling stuff. But at the end of the day, if you're not able to take this and make money with it tomorrow or trust it next week, then it's no use to you. And I hope you can kind of gauge the fact that I'm coming at you as a trader, not as someone trying to sell you a system. Like, you got to trade this stuff with us, guys. So you're going to need to understand how it works. Okay. So step one is we need to load the software, and it's prepping for trading. This is where we use profile arbitrage, and it tells us the overall locations of the profiles. It tells us where the levels are going to be for the day, and that helps us expect where we're likely to engage in either buying or selling the market. Okay, so step one uses the profiles. And if you're new to profiles, perfect, because this is the most amazing way I can teach it to you. Unlike trading other strategies, if you've ever heard of multi-time frame analysis, how many of you guys have ever heard of multi-time frame analysis? Like the 5-minute chart, the 15-minute chart, the 30-minute chart, the hourly chart, right? Everybody knows that, right? That's multi-time frames. That's called fractal analysis. But we don't do it like that. We've designed an algorithm, and an algorithm is just a fancy way for we've developed a process or an automated process that allows us to trade profiles on one time frame, but we pull multi-time frame profiles. So we don't need to change all of our time frames every day, and we get the privilege of loading multi-time frame profiles all on a 30-minute chart. So what's interesting is that this is the dailies, this is the weeklies, and this is the monthlies. All of them are on a 30-minute time frame. It's just the outcome of the profile changes. Okay. And Richard, I just answered that. So you can see the dailies, the weeklies, and the monthlies, they're all on a 30-minute. Because institutional profile strategies, or the actual art of TPO analysis or volume profile, was built on the foundation of a 30-minute chart. But if everybody in the world is looking at the 30-minute chart, what do you think the market makers are doing? What do you think the institutions are doing? They're manipulating price off those levels because they can. So what we do is we don't just rely on one form of analysis. We rely on a multi-time frame partial of that, and we use it to our advantage because what we're doing is we're using combinations of the multi-time frame levels. Okay, so let me kind of explain what that looks like. I'm going to go into my charts here for a second. I'm going to pick a market that we didn't take a trade on today. I'm going to go to gold, and I'm just going to clear globals for a second. Give me 1 second. Just going to go to the gold chart, and I'm going to just show you exactly what this looks like. Okay. And let's go in here and just duplicate a new tab. Actually, let's duplicate a new window. And the reason I want to share this with you is because the point of this breakdown is to teach you step by step. Okay, let's turn everything off, all of the zones, all of the stuff that you're seeing on your chart. And I'm going to just take the market of gold. It doesn't matter if you're looking at gold or the S&P or any other markets. I'm going to turn the price bars off. Okay, and we're going to merge all of these profiles back because this is how it starts. Okay, this is an example of a profiles chart. Now, a couple things that we need to break through here is that if you look, this is a 30-minute chart. And it says macro profiles daily. Well, we have the ability to turn this to macro profiles weekly and macro profiles monthly. But the concept is the same. We always start with full profiles like this, okay? And there's no edge to reading profiles like this. So if you were to load the daily volume profile on the platforms that come as your standard, your standard settings, or even if you bought, profiles that only work on the 30-minute, there's no edge to that. And the reason for this is because every profile has more than one point of control. And the problem with that is that most people don't understand that that having one profile that has multiple point of controls is not a true representation of balance in the market. So you're really not able to trust the levels effectively when looking at value area highs and value area lows. Now I'm going to simplify this down a little bit, and we're going to go back into the PowerPoint and explain what this looks like. Right now, I've got a chart loaded of the dailies. Okay, that's the daily on the 30. I also want to go back and I want to load a chart of the weekly. So let's go back and show you what a weekly profile looks like. I'm going to stay here and I'm going to go and turn this to weekly. And I'm going to recalculate the profiles. Give it a second to load. This is an example of the weeklies. It's the same time frame. Okay, it's the same time frame. But what happens is the weeklies look at a period of 5 days. So unlike the daily that's giving you a profile on every single day, you have the ability to look at a profile that is giving you the analysis is over 5 days. So this would be 5 days, this would be 5 days, 5 days, 5 days, and 5 days, right? And the difference here is that you're still on a 30-minute. It's the power of the profile that we get to manipulate multi-time frame levels. So why am I sharing this with you? Well, because the goal here is to be able to explain how we pull our levels for creating multi-time frame arbitrage, okay? So what I'm going to do is I'm going to go back into the PowerPoint and explain to you what that means. Every single profile product out there, and I mean it, guys, I've researched them all. They all produce what they call merged multimodal profiles, or they just look at profiles that aren't splitting arbitrage. And the breakdown of this means that every profile on every platform or any other profile indicator out there, they're always several points of control, right? You've always got several point of controls. And the issue with that is that's not balanced. So that's no good, not happy for me. I would not trust trading levels from an unbalanced profile, okay? So what our software does, and this is what produces one of the most important edges in our trading system from a top-down perspective, is we take fully unbalanced analysis and we auto split them. And we take a profile and we turn it into 1, 2, 3, 4 profiles, okay? And what we're doing now is we're separating the different point of controls in the day and in the week, because we also look at multi-time frame, right? So if you were looking at the daily profiles, we're looking at it on the day. If you're looking at the weekly profiles, you're looking at it on the 5-day session from Monday to Friday, right? And the reason this is super important is because in order for us to properly understand the daily auction, once you split the profiles into balanced distributions, we end up with 3 patterns, okay? And essentially, when you trade a financial instrument, the problem with a lot of traders, and I always like to start with a problem and then provide a solution. If I were to fill a room, let's say we're at a conference room and we're all at a workshop, and there's 30 of us in the room, and I showed you all the same chart, I guarantee you everybody would have a different perspective of if it's a trend or if it's a range or if it's an oscillation or if it's chop or if it's a pullback or whatever. But with profiles, there's no confusion. You never have that. In fact, the goal is for us to not have to have that, because once we split profile analysis, you only ever end up with a D pattern, a P pattern, or a B pattern. And what this means is this is just an oscillating market. This is a market that broke up and trended into an oscillating market. And this is a market that broke down and trended into an oscillating market. And the reason it always has an oscillating section to the pattern is because 80% of the time, the markets want to be in this. And the reason for that is because that's a value area high and that's a value area low, and this is viewed as expensive and this is viewed as cheap. When the market's trending up or down, nobody in the world knows where it's going until it stops. In fact, trend trading systems are great, but the only reason that the reason why trend traders normally have very low winning percentages is because they need larger trades to profit. They need to catch the big moves because the market never trends all the time. And so let me kind of answer this, and it's really, really important that you understand this, is that every single profile has a value area high and a value area low, a value area high and a value area low, a value area high and a value area low. If the market's oscillating, okay, everybody knows that this is expensive and this is cheap. If the market breaks up and then oscillates, okay, nobody knows what's going to happen in this move. But we can understand that eventually we can see that this is expensive and this is cheap. This market moves down, nobody knows where it's going, but once they stabilize, everybody can understand this. Why do you think the institutions and the big banks want to keep a market in balance or in a range? Anybody have an answer to that? And I'll let you guys put your answer to that question. Why do you think the institutions or the big banks or even traders that are managing funds, you don't need to be an exchange or an institution, but why do you think they need to have the market in a balanced environment? Well, the answer to this question, for those of you that are waiting for it, is they need to be able to ascertain where cheap and expensive price levels are because they're moving big money around. So as a day trader like you and me, it's pretty important that we know where their levels are. And we get a chance to be able to participate at the right locations because we know what they are doing on the auction. Okay. Now, I haven't showed you where we're buying and selling yet. I've given you a deep dive on the 3 patterns that come out of splitting our software. Okay. So let me explain what that looks like. Let's go and split the chart of gold. Okay. So this is a week. Okay. This is a weekly profile chart. So if I go in here and I auto split the software, all right, let's wait for it. It's going to auto split everything. You see what it just did? It just split all of the profiles into balanced profiles. Okay, let's merge it back and show you one more time. It's taking all of the unbalanced point of controls and it's auto splitting them into balanced pattern distributions. And then what we can see here is that every time we had a profile, that's a D, that's a P, that's a B, that's a D, that's a D, okay? Well, I can tell you right now that this market traded sideways, broke up, traded sideways, broke down, traded sideways, and then closed on the week. I don't even need to see a price chart to see that, but we can do that. Let's turn it on. There it is. We went sideways, we broke up. And what's interesting is if I turn these levels across here, just look at this. Let's turn this off for a second and I'll share with you why this is important to me and why it's important. It should be important to you. Okay, let's go right here. If we know that this is a P pattern, okay, this is considered expensive. This is considered cheap. So by definition, if the market got up here, we should expect selling, buying, right? And this is just Profile 101, guys. I'm going to help all the new guys, and then we're going to get into the meat and potatoes, okay? When I turn this back on, look at, you can see where the institution stopped price. You can see where they bought price. And then the market broke the level, came down. They oscillated here, right? Well, guess what that did? That put in the value area low. That put in the value area high. So when they bought at cheap prices, guess what they did? They came back up and waited to sell. That's what we do. We need to know where their levels are so that we identify the areas of interest, okay? So what I'm gonna do, okay, is I'm gonna just keep it simple, and we're gonna now go back into our workspace, and I'm gonna go into step 2. Now, before I talk about step 2, does everybody understand what I was just doing with regards to identifying the splitting, identifying the patterns, identifying cheap and expensive on profile patterns? If you're new, we're going to be giving you an ebook on this just for being here today, okay? So Alan wants to know, is there a basis for auto splitting into the 3 chart types, or does that work? Yeah, 2 years of mathematical algorithms and 4 programmers and 75 builds of the software. Right? So what I'm going to do, guys, I'm going to explain the entry strategy. Okay? So when we look at an entry strategy, really what we're doing is we're taking the software from step 1, auto splitting, and then now what we're doing is we're going to locate the levels in which we want to trade. We need to know, where do I want to buy and where do I want to sell. We don't need to spend time getting the software to do all of its magic. It does that automatically. We just need to know where we want to engage in business, okay? So what we end up doing with the profiles is what it does after it splits. Once the profile software splits, we can turn on the buy and the sell zones. And, well, let me get to your question, Alan, and we'll go over that. It identifies the buy and the sell zones, and then it also identifies the raise from the value highs and the value lows. So what we're doing here is we're locating expensive and cheap locations on each of the profiles, right? We're identifying all of the different locations in which the market's going to expect it to have. Now, Alan's asking some great questions, so I'm going to repeat this. What would assume that each week is always fundamental or just 3 types of charts? Well, it's not each week. In fact, we use daily, weekly, and monthly, but it's the 30-minute. What assumes that is the profile never changes, Alan. So if we go back, and I'll just kind of rehash this, it doesn't matter what market we look at, whether it's crude oil, whether it's the ES, whether it's the Russell, you're always going to have a profile, because that's the way that the market identifies whether you're oscillating, trending up, or trending down. So let me go back to kind of help maybe the question here, and maybe hopefully I didn't lose too many others, is that no matter what, your market can only ever be doing 3 things. It can either be going sideways, it can either be going up and then sideways, or down and then sideways. A market can only ever do that. So let me explain this. A market can only ever go sideways, and then it can go up, and then it can go sideways, and then it can go down, and then it can go sideways. That's the uptrend. That's the downtrend. It could continue to go down again, and then sideways, right? Up, and then sideways. But a market can only ever go up, down, or sideways. So the P identifies an uptrend that went to sideways. The B identifies a downtrend that went to sideways. A D identifies a range. It never changes. Okay. So let's go in here, guys, and let's go back over and let's explain the levels, because this is where we want to focus on locating trades, okay? So what I'm going to do is I'm going to go into crude oil, okay? And we're going to start on the weekly chart. And I'm going to just clear this off. Okay, I'm going to start on the weeklies, okay? And we're going to just clean up all of the levels off of crude oil today. There was a great long on crude today. Really, there's a couple great trades today on crude, okay? I'm going to turn all the zones off, okay? And we're going to start on 2 different time frames. I'm going to show you, I'm going to put them side by side so that you can understand what we're looking at. And we're just gonna do this step by step. This is not just a webinar, this is a teaching exercise as well, okay? So what I'm gonna do is I'm gonna show you crude oil here, guys, okay? Crude oil is, both of these charts are 30 minutes, okay? The only difference between the 2 of them, okay, is the setting in which we have the profile. Okay, so let me explain this. This is a 30-minute. This is a 30-minute. The difference between the two is that this all is 1 week of trading that is going to basically form bigger profiles. If you take a look from here to here, we've had 1, 2, 3, 4, 5, 6 profiles. On the week, 1, 2. It's kind of like looking at a 5-minute chart and a 30-minute chart. The only difference is we're using different profile analysis, okay? So what we do in our trading room, and this is the backbone to the strategy, is that we always start by going over the higher time frame first, which is the weekly. And we go in here and we turn all of our levels on. Just like this, okay? Now these are historicals. So these levels will never move. And you're probably wondering, well, where are these levels coming from? These are the levels that are tradable. And this is a level that came from a value area high way back here 5 weeks ago. And when we broke above it into a P shape, okay, and they had it expensive up here, and we knew it's cheap down here, when they come back down to test, that's where our trade locations are. Now, we don't execute and manage day trading risk on the 30-minute. This is an area of interest. So if we look at what happened today, price broke down onto crude, and it came right down here. This is what we call an AOI. This is an area of interest. We now want to look into the data at that level. We want to look into the data. We want to be able to go into that data and say, hey, if I'm going to put trade on here as a day trader, I know that these are where big traders, big blocks of trades are going to be going, because this is an institutional macro level, right, from a weekly profile chart. So when we get back up there, or we get down there in this case, I want to see if the buyers are going to support the price action. And that's what we're going to do on our day trading timeframes. The example here on the ES, same thing happened on the ES today. I'll go over to the ES, okay? The ES today had bigger levels. Let's actually go to a different market. Let's go over here to the NASDAQ. Same thing with the NASDAQ. NASDAQ came down. These levels were created way over here, from over here, way back over here, and it forecasted all the way to today. Remember, our profile levels are looking back multiple days and multiple weeks from areas of exchange that are in play each day. So if the market comes back down to them, we don't just trade every level, we get ready to participate when the day trading timeframes tell us to. I took this trade in the NASDAQ today. I'll show you the charts after. We'll show you the entry and the fills and that. I traded this entry right here, right there. And I wrote it up for the first leg, okay? Why did I want to engage in trade in here? Because we were at key levels of interest, and therefore when we get the trigger inside those locations, that's where we want to trade, okay? Let's go back over to crude oil and just take a look at crude again, okay? Now, if you notice, crude oil came down, and remember what I said about expensive and cheap, okay? Remember what I said about expensive and cheap? On the profiles, expensive. Why? This is a D pattern. The market came up, oscillated. This is cheap. Came back up, expensive. Came back down, cheap. Came back up, expensive. Then they broke it. Okay? Why do you think that the market is selling off here and buying here? It's because of the daily auction. That's just, there's no other way to explain it other than if you don't know that, you need to learn this stuff. It will change your life if you're a trader. Once you understand how to read the auction, doesn't mean you need to trade on the 30-minute time frames. You need to understand the levels on the 30-minute time frame so that we can scalp and we can day trade on the smaller time frames. Okay? So let me explain what happened. The market broke down into a B, which now meant that this was expensive and this was cheap. They bought it here and they're going to start selling it here. And that's just the way the market works. So when we look to take trades, guys, we don't trade off of the daily levels. Okay? So this is really, really important for you to understand. We focus on areas of interest from the weekly chart. Why do you think that is? Anybody here want to know why we trade the higher time frame profiles? Anybody have an answer to that? I'm asking you guys questions because I want to engage. This is how traders learn. If you're just sitting there expecting me to teach it to you guys, I'll do that anyways. I want to know what you guys think. They're major levels, Nina says. They're stronger. Brad says they're stronger. Absolutely, they're stronger. And they're created from bigger time frame profiles with a more significant impact on price. So what I do is we locate where we want to do business every day, and I use these profiles for trade management. I like to look at where, if I'm scalping, remember this is a 30-minute, that's a significant move on crude from 40 to 90. That's 60 ticks, 50 ticks, right? That's a significant move. That doesn't mean you're going to catch all 50, but if I'm long crude oil from down here, okay, if I get long crude oil off this level, I better know where the profile levels are so that if I'm in this trade long, I know where I need to get out. And that's what we do not only on our smaller time frame. What we do is we go into it. See here? If I was long down here, I would want to be out here. I would want to be getting into the market down here, and I would want to be getting out of the market up here because that's where the sellers are. They'd be at expensive price territory because they're going to sell it back. They're going to drop it back down. Okay. So actually, let me explain that. So Richard's asking, how come your TPO charts don't show the letters? Because we've built it as a line graph instead. So let me go and turn the volume off. So these are the TPO levels here. Okay. This line graph is, instead of us printing the letters, we do it automatically for you so that that you don't have to go ahead and memorize all the letters. The line graphs do it all for you. And the reason for that is due to the multi-time frame aspect. Because if you're putting profiles from multi-time frames, the lettering can be quite cumbersome for loading data. If you start loading weekly and monthly profiles, let me tell you, it took 2 years to fast track the development speed to be able to get this to load very, very effectively on small look back charts. Okay, so let's go back into this, guys. And not necessarily, Richard, because you just need to learn how to read the price bars with the line graph. In fact, that's one of the reasons why we auto split the software. Okay, so let me explain this for a second. If we're going to now plan trade levels, okay, if you're going to learn now that we have an area of interest where we want to engage in trade, then the next question needs to be trade management, right? So the first thing we do is we rely on the software to do all the heavy lifting for us. Trust me when I say this, you don't need to do anything other than turn things on or off, okay? Then we locate where we want to buy or sell. Are we going to buy levels or sell the levels? Then what we're doing is now we're looking at managing the risk. We're managing the trades. And that really involves looking at smaller time frame charts, okay? And the way we do this is we teach a comprehensive trade management technique that allows us to look at anchor points. Anchor points are basically a term that is used to identify the names of profile levels. So if I said we're going to exit at the point of control, that's an anchor point. If I said we're going to exit at the value area high or the next value area low, that's an anchor point. Structure is looking at price structure, the wicks of candles, structure, support, and resistance. And then the ATR also looks at a study of the average volatility on the 30-minute time frame, okay? Now, the reason we call this comprehensive is because somebody earlier in the chat box said, what does your strategy do in changing conditions? Well, our strategy never changes. The way we manage trades changes. So one thing that we really benefit from is we never have to change our trading system. We just have to have a handle on how we manage trades in conditions that are different, right? Are we going to hold on for a bigger target, or are we going to try to hold on for a smaller target? Do we have a larger stop today or a smaller stop today? It really just depends on the structure and the levels and each opportunity. And that's one of the reasons why we use a smaller time frame timing chart. Okay, so up until now, I've spent a lot of time going over the levels. I've spent some time going over the patterns. And I've also spent some time identifying where and why we want to get into the trade locations. What I'm going to do now is I'm going to explain how we enter and exit trades. So we use a timing chart. And that timing chart is where we take a 1-minute fractal. So let me just repeat myself. The 30-minute chart is our levels. Okay? That's our levels. The 1 minute is our trade management. Okay? So if you go over here and you take a look, what we do is we take the 1 minute chart and we convert it to range or our custom Renko bars. We convert all this for you. You don't have to do anything. You just need to learn what we do, and we build everything for you guys. Very turnkey. Okay? And this is an example of a Renko chart right here for crude oil. Right here. It's a 7-tick range or a 7-tick Renko bar. It's the equivalent to a 1-minute chart. And what we do is we use it for timing, because this is a 30-minute level. You can see the dotted line here. That's a 30-minute level. Then I use this every morning in our trade room so that we get everybody's mind on the same page. Okay, we're going to be buying or selling levels today. What do we need to do? Well, we use a combination of 3 indicators, right? We use the order flow print profiler, we use the momentum oscillator system, and we use the auction curve location. And so when we start coming in to a 30-minute level, there's 3 ways in which you can enter trades. You can enter trades as soon as price gets in, putting a limit right at the level. The problem with this, okay, is that you can make a lot of money, but you can lose a lot of money quickly too if the market's not ready to stop at the levels. We call this the first touch. And the first touch traders get in the first, but they also take the most amount of heat if the market is not ready to reverse. The next trade is one of my favorites, which is what we call the delta hook. And the delta hook is really an example of the market coming down, okay? And it gives us this hook right here. This is an order flow bar right there that tells us, the green highlighted bar tells us that we have a very, very strong impacting delta that where the buyers are stepping in. Now, what separates the hook from just being an order flow bar is we don't just rely on the order flow. We rely on the order flow when momentum is on our side. And I like to call this the delta force trade, because what we're doing is we're relying on the level, and then we're relying on the delta with momentum on our side. And then there's the other trade, right, which is the pattern reversal. And this is where the market breaks the structure right here, and you take it on the retest. You get in on the retest. So the 2 trades that I favor the most, and this is just me as an instructor and as an architect to the system, is I like to wait for the market to either give me the delta hook with momentum on my side, right, combining the deltas, or I like to wait for a structure breakout off those levels. The best part about these is you get confirmation. Confirmation. Okay. Who in here likes to have confirmation with their tradings? Anybody in here? Anybody in here that if I could show you trade levels every single day, And in the morning, I say, wait, guys, we don't have confirmation yet. If every time you were getting ready to take a trade off of very, very important levels, I just said, wait, guys, we don't need to get in yet. There's too much risk. Wouldn't that be a pretty powerful environment to be in? Okay. Well, let me explain this. This is exactly what we do. So let me show you some trade examples, and I'm going to go into the charts, and we're going to look at them. This is an example of levels, and these were what we call a first touch trade. So a first touch trader does not need a trade management chart. And the issue here is if the market wasn't going to stop right here. So this is an example of arbitrage levels created from value area lows and value area highs way in the past. The market got up there, you would sell, you put your stop up here based off ATR because we don't have structure on a timing chart. You would enter down here, your stop would be down here off ATR. And the reason this type of trading is very, very, very effective, but it's also aggressive. And if you're trading a very large account, then you can do this type of trading, because if the levels don't hold on the first zone, then ultimately what we do is we would scale into the second. And unless you're trading with an account that can take multiple entry points, the first touch entry is normally not where everybody starts. Okay. It's a very, very profitable and effective method, but it is also a very risky method if you're not capitalized to do so. So the way in which we look at teaching traders is we look at the delta force entry. Okay. I took this trade today in the trading room, so it cannot get any sooner than this. This was a level that basically came from a 30-minute chart on the ES. If you took the first touch entry, you would have been in right there. Now you notice how there was green deltas on that chart. We did not have momentum on our side. So if you took the first touch entry, you would have had to sit through all of that and all of that before, voila, there was the entry Q bar. That was the strength in the deltas right there. The difference is that we had rules met for momentum at the same time. Now you could not have taken this trade without understanding three things: the level, the order flow, and the momentum. And on top of that, we are in value on the auction in a conservative buying environment. Now, if you did not take the delta force trade, you could have waited for it to break structure here, and you could have entered it right here on the retest. But I was already out for a profit before having to wait for that pullback. And that's the difference between the delta force and the confirmation entry, is that the delta force trade gets you in a little bit sooner with a lot of confirmation on your side even before structure breaks. Let's go in and take a look at another trade. This is a trade I took today on the NQ. And you'll notice that the NQ came into three levels. Boom, boom. We started to get some buying here. They were trying. It wasn't ready. And what's interesting is that there wasn't rules met on the delta for momentum here yet. They overshot it for a stop run, taking out all the stops on that structure low, only to come into that last level of interest before they ripped it back up. We got our entry bar, and we also had our momentum on the right-hand side. And I rode that for 17 points. This was today. One contract, $345 on the NQ. Okay. Now there was a bigger move that came after that. That's not what I'm here to do. I'm not here to teach you to catch the entire leg out of every market. I'm here to teach you a repeatable pattern that happens every single day off of our levels. You just need to learn it. Let's take a look at the difference now between a confirmation entry and a delta force trade. A confirmation entry is where we have the same level. There's the level. Structure break on the pattern. There's the entry on the retest. So the difference is we get what we call a reversal pattern that creates the structure break. Okay. This is a very happy trade setup. The only issue here is that you sometimes will miss trades because not every day the market gives you the perfect pattern. So let me show you this, because if you use the confirmation or the delta, you're in really, really good shape, guys. I'll tell you that right now. You're always going to get either the delta or the confirmation. Either way, you're trading it. This is an example, okay, of the pattern break. We didn't get the delta here. So this is an example of the level. It overshot it a little bit, came back up. There it was. Structure break, okay, entry, stop below the lows, target. Okay, let's go to another example. I'm just showing you real trades that took place in the trading room. Then we'll go today and we'll take a look at the charts. Here's another example of a confirmation entry. Level off the weekly chart. Price came down. Boom, boom, boom. Structure break right there. Entered on the retest. Stop would go below the lows. T1, T2. Okay, so when you look at managing these trades, if you're taking a short off of an area of interest, okay, when we talk about the ways in which you can manage your exits, you're either going to be taking, right, let's just put this here. You're either going to be taking the hook trade, which is the delta and momentum, or you're going to be taking the structure break trade, which is the pattern reversal. And these are the two highest probability setups that you have trading the market profile levels. And either one of these, you're going to follow these three management rules. You're either going to exit at the next anchor point, you're going to either exit at the next market structure price wick, or you're going to look at a factor of risk versus reward. And the risk will change dynamically just depending on how far away you are from the highest high in the shorts. We always put our stop above the highest high for shorts. And then if I go to the longs, okay, we always put our stop below the lowest low for longs. Same thing here. I'm just going to draw this here. You're either going to have the delta hook with order flow and momentum, or you're going to have the pattern break. Either way, you're always going to put your stop loss below the lowest low, and you're going to manage your trade for exits on one of these three. It never changes. Okay? It doesn't have to change. Remember this. First you learn the software, then you learn the setup, then you learn the trade management. If you try to learn the trade management before you learn the software, let me tell you, you're trying to buy an apartment building before you learn how to buy a duplex. Okay? So let me go over this for a second. We covered using the levels. We covered the areas of interest, where we want to buy and sell. We covered trade management. Let's go into the charts and show you the trades from today before we start talking about metrics and statistics. Okay, let's go back in here, guys, the weekly charts. Let's just move these back over. Okay. And don't worry, we're going to go over examples, guys. We're going to talk about it. We're going to ask questions, and we're going to be able to go over all that stuff, okay? Let's go to the ES, okay? So, and I'll just use the most recent trades because these I took this morning in the trade room. I'm trading one contract, guys, one lots. Like if you're trading 5 or if you're trading 10, the point is I'm teaching you to trade for ticks. And if you can trade for ticks and you do that for a couple days, you can add to your size should you choose after your comfort zone. So what we did this morning was we extended our levels. This was a level off of the daily profile. So there wasn't a weekly level on the ES, but there was a daily level on the ES. So there was no weeklies for us on the ES, but if we go down to the daily, you're going to see here that that's exactly where they stopped it. This was from a prior P pattern that happened 1, 2, 3 days ago. Last week on the 5th. So this level was produced on September 5th. It is now September 9th. 4 days ago, that level was produced. When we got back down there today, we had an opportunity to look inside the data and see if we wanted to participate in a trade. Okay. So at the beginning, I said you could be a day trader, an intraday swing trader, or a scalper. Well, let me explain something. I run a trading school. We've got thousands of traders all over the world that use our tools and systems. I'm not around my computers all day to take the level and hold it to the value area high, or even hold it throughout the whole day. My goal is to get the first leg every morning because I'm a day trader. If you have the flexibility to trade multiple size and trade these for larger trades, be my guest. My objective is to teach you how to take profits at the beginning of the trades so that you can consistently feel confident in your abilities to pay yourself as a day trader. Okay. So let me go in and show you the trade management on this time frame. Today on the ES, this was the level. We came down today. This was the trade. And it came in. We waited for it. There it is. Okay, if I turn the auction curve on, we're going to turn it on here. We were in cheap territory. We were in the midline. We broke down. There was the entry. They broke structure and we shifted value. Now we're in a trade in cheap territory off of a value area low arbitrage with momentum and delta on our side. You can't ask for more confirmation. Like it doesn't get any better than that. Right? It doesn't get any better than that. There's the exit. Now, why did we exit there? Because this was an anchor point of structure right here. I said, traders, this is the first place in which the market's going to give us a hesitation. And it did. I said, I don't want to be in this trade any further with one contract. If they decide to break it back up, where's the next place they're going to go? They're going to go up here to the next area of resistance. And I told the traders, if you trade with more size, you can move your stop to break even and hold on. And look at what they did. They stopped it, right? So the reason I'm sharing this with you is this is all about what we teach in the trade management of what we do. Let's go to the NQ. The NQ is a different read. The NQ had several levels created from multi-time frame profiles on the weekly. So these levels were created from way back here, way back there. In fact, it was created from 3 profile levels. One from over here, which happened 5 days, 10 days, 15, August 16th. That level, that level was a very key area for selling before for us. We were looking to sell up in here. We were looking to sell up in here when that time happened. When we broke above it into a P, into a P, into a D, down into a giant B, where it's cheap and this is expensive, I want to be buying in those levels. I don't want to be trading off of the 30-minute. I just want to know that that's where the market's likely to stop. So when we go into these levels like this, I said to the traders, if we're coming into the NQ today, it's the weakest market, but I'm going to engage in the trade. And so we got that reaction. This was the NQ. Okay, and let's go back over to it. And let's wait for it right here. Okay, this is the NQ. You'll see here that the NQ came in. We'll just go by bar. Came in, it overshot. Came back down. We got a bounce. There was the delta. Does everybody see this bright green bar here? That bright green bar is controlled through what we call delta spread analysis. If I turn off everything, how the heck can you tell that that green bar is more significant than every other positive delta? This is important for me to explain this. We've got positive deltas on several bars. The reason we trust that bar as the impacting delta is because our software shows you, okay, our software shows you that that delta is very, very important. Yes, there was other positive delta, but that bar was significant. And what's important is that bar is significant at a market profile, volume profile level. We were here. There was other deltas here. Didn't get the reason to enter on momentum. We had momentum on our side here. Okay. And this is what's really important, because this tells us that the strength of the market has buyers on our side at a key area where we were planning on buying. We don't have to sit through the heat. We don't got to sit through the stop hunt. We can take an entry and we can finally trust that the level has the probabilities of giving follow through. And I think that's the answer. At the beginning of the event, I said, we're all here for the same reason, right? We want to know where we're taking a trade. We all want to make money today, but we want to do it where we're comfortable, where we have less fear in pulling the trigger, where we believe that if I'm going to take a trade, I can trust that this trade has merit and that I can expect it to work. And then why would I trust it? That's the question, right? Why would I trust it? Because it works, guys. So TJ is saying, isn't day trading if you take advantage of all the scalping presented, taking advantage of price? Well, that's a great question. So here's a good thing. Day trading is a subjective term, because technically, if you're a day trader, okay, you could be intra-swing, you could be day trader, you could be scalper, right? It all just depends on your objective. And in this scenario, this is not a scalp, that's a day trade. Okay. So scalping would be maybe holding for 10 ticks. And you're in for 10 ticks. Remember, these are levels. Okay? These are levels. And so what we're doing is we're saying, self, this is where the institutions are going to engage in business. Let's wait to confirm that we know what they're doing. So should you choose to scalp with that confirmation or take it for a larger target, it's totally up to your trade management, TJ. And there's no right or wrong answer. If you're going to scalp, I would probably wait for the structure break, okay? And then try to get a retest and put the stop below the next low. But I like to always have it on the lowest low. I prefer, and if that's too big of a stop for you, then I would just not take this trade. Let me show you the Russell trade. The Russell trade today was fantastic, man. Like it was just a beautiful trade. So here was the opportunity that we had on the Russell. It was the strongest market. I missed this trade. Vincenzo says, I concur. So this was the entry bar right here, because this was the first opportunity we had at the macro levels, okay? We had a whole bunch of confluence here, lots of levels. Sure, we had some deltas, but we didn't have any momentum on our side yet. We did here, though. I missed the fill by 2 ticks, okay? And this was the strongest market, and they ripped it. Like they just ripped it. And here's the cool thing. The traders that wait for confirmation, they're not entering at the first touch. They're not catching that bounce. They're not worrying about the retest. They're waiting, ding, 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 for proof in the pudding. But if you're just looking at momentum and order flow in the wrong location, you're probably scratching your head and you're saying, well, why not that? Why not up here? And why not over there? Because it's all about the levels, guys. It's all about the levels. You need the levels and then use the trade management. You do not start with trade management. You must know where you want to engage business and then wait for the levels. Okay. There was an opportunity on oil, okay, today for a long right here on a structure break. There was a structure break here off crude oil. Right there, boom, boom, boom. There was a structure break. We had the deltas on the structure break. This is a great trade for a decent profit, decent leg right there. That was a nice trade. There was another trade on gold. This was a huge trade today. I don't have the levels plotted, so we'll go back to a different one. We stayed out of the bond trade because this is a great example of we were looking to get long on bonds right here, but there was no entry pattern. So we didn't even buy the deltas here because there was no reason to get long the deltas there. We didn't even get long the next level of interest down here. There's two zones in here. There wasn't a reason to. They just kept dropping it. There just wasn't a reason to. And this is one of the reasons why you don't have to get into trades and have heat. Now, I'd be very interested here. I'd be very interested here off market open if the debt market in the European session can open up and I see deltas coming in here with positive momentum. That's when I would engage in this trade on the bond market. And here's the cool part. You want to apply this to the DAX. You want to apply this to any other market that you're looking at. I got traders in here asking about the DAX and stuff like that. All that matters, okay, all that matters is that you convert the time frame. So what we do is we go back up here to our trade management, and you can email me and I'll get you the conversion for the 1 minute chart on the DAX, and then you can trade the timing chart on the DAX or any other markets, right? So, I mean, we've got 8 markets that we cover in futures, which is pretty extensive, but you can do that for Forex. You can convert it for any market that you want, right? Because the 30 minutes never changes. The profile chart never changes. So you're always trading profiles on the 30 minute, and then you manage trades using the Orderflow trade management momentum suite, right? So these are all the trades that I took. Let's go back in here for a second. Let's talk a little bit about statistics, okay? So a couple things that I want you to know is that these are trades that I took today in the trade room. I only took 2 trades, 340, 180, 1 lots on both of them. I'll go back over the stats over the last couple weeks. Not trading every day, guys. So let's go back into it. Let's just trading a couple days a week. Okay? So if we look at the stats, I'm just going to show you on a trade-by-trade basis. Had a bit of a drawdown. It happens. Everybody has that, right? Took all the profit back up. I'm back on another tear right now. The last 5 trades have all been wins, right? You don't see me giving back my profit. And this is just trading 1 lots. Like, I could be trading 10 lots, and you can do the math. You can do the math, right? So if you're interested in learning what we're talking about here, okay, these are trades taken in the trading room. I range anywhere between 65 and 73% hit rate, okay? I range anywhere between a 63, 64% winning rate to about a 70+ win rate. It just depends on the market conditions, right? Profit factors over almost 1.9. It ranges anywhere between 1.9 and 3, 1.75 and 3. Just depends on the week, guys. And the average win to loss ratio is a 1-to-1 ratio, right? So, you know, you can look at my risk and reward. Largest losing trade was 460. Largest winning trade was 450. So you're at the same. It's a 1-to-1 reward to risk. So if we want to get down to the metrics and the brass tacks of that, okay, when you look at comparing risk and reward ratios, if you have a 1-to-1 risk and reward ratio, you need a 51% winning rate to stay profitable, right? Well, I'm trading at 65 to 70% winning percentage, and I'm trading at a 1-to-1. You can do the math. Let's go in and pull the numbers on those metrics, okay? And let's just go in here and just pull the risk and reward sheet that I use, and we'll just do the math. Let's say you're trading a combine or you're trying to get funded or something like that, right? You're trading a $150K account, right? And then risking only $375 per trade. Well, my winning percentage, I'll just use today's metrics at 65%, and my reward to risk ratio is 1-to-1, right? You can do the math. It's a winning model, right? Right? You have to be able to understand statistical measurement in order to be able to trust what you're doing. And the reason I spend a lot of time on stats like this, guys, is because I have traders that trade large accounts. How many trades per day, Richard? There was a ton today. I'll give you an example. All the indices came into levels. I'll just go over. There was trades in the indices, so all 4 indices had trades. The crude oil had a long. Gold had a short and a long. The bond didn't. The euro had a long. There was trades across every market today. So it really just depends on how many markets you're trading and also the markets that you do trade. And it really just depends on the entry pattern, right? Like today, there was a short on crude and a long on crude. Oftentimes, you'll see me trade more than one market, mainly because I like to trade when the trade happens. I don't like to force trading just one market. I don't believe in trading just one market. I do believe that you should learn the system on one market, but I do believe that you should open up yourself to understanding global assets to some degree so that you can rely on, you know, the strategy producing an opportunity rather than forcing things on a market that's not giving you something, right? And I think that's really, really important. I think that if you're going to get good at something, understand your trading system and then apply it for the best market at that time, right? Now, that doesn't mean that you have to trade 8 markets. I've got the primaries. Normally, the primaries are these 5. The indices and crude oil. These are the secondaries. Bonds, the euro, and gold, okay? So another thing too is we also look at using a scanner to tell us conditions, whether we're trading on an inside or an outside day. And that opens up the opportunity for us to know when to be expecting strong reversals versus trending days. When we're on an outside day, I would look to manage the trade differently than on an inside day. And these are things that we cover inside of our trading room. We also look at correlation. The reason I know that the Russell was going to give me the best long is because it was the strongest market. The reason I know that my NASDAQ today was very an aggressive trade is because it was the weakest market, right? The ES trade was the best trade from a risk management perspective that I took, and I missed the Russell. We didn't get the setup on the YM, okay? I also missed the short on gold, and I missed the long on crude, right? I also missed the long on gold on the other side of it. Right? And that's because I'm not looking at my charts every day, guys, all day long. I trade a couple hours every morning, and I trade, right? And, you know, we use correlation analysis to tell us which market is strong or weak, Richard. So if you're interested, this is a free indicator, okay? So you can email us and we'll give you the links for the free stuff. So I want to talk a little bit about, you know, just for being here. We understand that a lot of you may or may not know everything that I've explained on profiles. And trust me, if this was my first webinar, I would expect that I would have questions. And that's why I think learning is a fun process. I know we all want to make money. And trust me when I say this, that we can show you how to make money and manage risk effectively. But the goal here is to teach you the foundation so that when you come into the live markets, you really understand the tool sets. And one of the main tool sets that we use is multi-time frames. So just for being here, okay, I'm going to give you a book that I wrote this book. It's a 35-page book on profile analysis. And basically what you're going to learn is you're going to learn all the analysis. You're going to learn the lingo. You're going to learn the patterns. You're going to learn the splits and the volume and time and then all of that. So just watch your email. We're going to give it to you because I think that if you're going to really take what we're doing very seriously, we just want you to know what we're doing so that you can trust it, okay? So did everybody enjoy that? Give me a yes if you learned something today. Did you find that informative? Just give me a yes if you found that today's event was good. I always appreciate the feedback and the comments because as an educator, an instructor, and a trader, it's always about reaching the audience. Perfect. So as I mentioned, we use a tool set. And if you're going to want to trade that tool set, there's some indicators that you're going to need to purchase. And if you want to trade tomorrow morning or this week and next week with us, this is the cost of the system. Now, let me explain the details. I'm going to put the link in the chat box. And then if you have questions, I'm going to go over them here. Okay. So let me just kind of go over this for a second. It needs the level software. Just so you understand it, you need the level software. The auction curve maps out trade location and curve theory and structure permission. The momentum system tells us momentum confluence and tells us when we have the order flow on our side. The print profiler gives us the delta spread analysis, which helps us understand the important price candles that we need to be entering on, okay? Now, if you were to buy each of these independently, okay, if you were to buy each of these independently, you're looking at a really big price tag, because a lot of traders, they'll normally buy one and then they'll trade it for a bit. And then they'll buy two and then they'll trade it for a little bit more. And then they realize, man, I just should have gotten the system because it's a full package, and then I can go and trade with these guys and I can put it all together and make it work for me. Well, when we bundle this, we drop the price tag a lot because we understand it is an investment. Guys, I know what it's like to buy courses and indicators. When I first started, my first purchase was $19,000. Okay. Okay. And so what's interesting here is that we also will give you 3 months access to our trade room. And our trading room is not just the trading room. It is an educational environment online. You've got a membership site of training videos. You've got a strategy section, which comes with several trading systems of all of the different profile levels and the way we enter trades. All of the software is good for 2 computers. Our in-house support will log onto your computer and install it for you. Training videos on each indicators. It's available on Ninja 8 for better performance. All the user manuals for all the software and the systems. But this is the big one. All of the stuff is pre-built for you. And it's very, if anybody in here has ever worked on your indicators or platforms, you know, you can lose days, if not weeks, setting up charts and setting up colors and configuring all the defaults and all that. We do all of that for you, right? And here's the thing, right? We spend copious amounts of time pre-building everything. So when you install the system, it comes directly as mine is, and you can trade with us. You don't got to do anything. It's a plug and play. We install it, you load it, you just follow along and learn. Now, what we're going to do is anybody that does invest in the bundle, there's a separate manual for the trading system. So yes, there's a profile manual. You're going to get that for free today. But when you invest in the system, I've built another ebook that goes with all of the training videos so that you can not only follow along with the manual, you can watch the videos and you can learn. It's like the Navy SEALs of trading, guys. Right? You get everything. And like I said, the trade room access it's a 3-in-1, 3 times 1, right? What you're doing is you're getting a live education, online education, and strategies. You get the live market trade room, the online membership site, plus the strategies membership, okay? And what's really important here is you understand how to move forward with this. Some of you are going to have 1 or more of these already. Can you guys give me a yes if you own one of these indicators? Give me a yes if you own at least one of these already. Steven says yes. Eric, Sergio, right? Rob, Richard, Bob, William. A lot of you probably already own 1 or even maybe 2 of these, right? Some of you don't own any of them. It's the same link. So when we go here to the membership, we go into the link and the link that I put in the chat box. And what I'm going to do is I'm going to show you what it looks like, okay? I'm going to put this back in the chat box for a second so you guys can see it. It's very simple. If you decide this is what you want to do and you want to trade with us and you want to take those trades with me tomorrow morning, I will be trading this tomorrow morning live in front of hundreds of people, okay? You've got the 4 packages right here, the 4 indicators. If you come down here, if you already own, let's say you already own the macros, okay, then don't touch buy now. Let's say you already own the print profiler and the macros, but you don't own the VM and the auction curve. Well, just select buy now and add whatever it is you don't own to the order flow or to the order form, right? Trade so much, guys, I call my order forms order flow. But you get the picture. If you need all of them, you hit buy now on each of them and it's going to add it to the shopping cart up here. So really you just add what you need to complete the bundle to be able to receive the savings, okay? And for those of you, okay, for those of you that have a lot of questions, or you want to see this on specific markets, or I didn't get a chance to cover maybe some of the details today that you want to learn about, okay? I'm going to launch a poll right now, okay? I'm going to launch a poll right now that that's going to require that if you would like my team to contact you. We're not here to bother anybody. I don't believe in hard selling. I believe in demonstrating through application. I think that the best demonstration is live trading, and we do that every single day in the trading, okay? And so if you're somebody that would like us to contact you and go over questions and go over the details of the system and go over the indicators or the upgrades, if you already own some and you need to basically understand the differences and all that stuff, then just put in the poll right now, yes, no, maybe so, and we'll reach out to you, okay? So what I'm going to do is I'm going to open up the chat box right now. So let's just go over questions while I've got the poll running. So Jerry says, in the 80s, I watched Peter Stuyvesant. Your explanation was superb. Looking forward to the recording. Thanks, Jerry. Appreciate it. Okay. Does anybody have any questions? I know that I've covered a lot of information, and a lot of you know me to I talk a lot. It's just me, guys. I love this stuff. It's been my life, and it's my passion. And as a system architect working with developers, I love trading, and I love watching traders make it. You know, that's as real as it gets. I really do love to see traders succeed, and I know what it's like to take losing days. Nobody likes to take losing days, and I like to make money. And I like to make money in front of lots of people, because not only shows you that you can do it, it also shows me that this was all for a bigger purpose. Okay. So Vincenzo says, why aren't the market profiles taught in many places? Well, because there is not, well, I'll explain this. There are other platforms that have profiles. Trust me, there's platforms that specifically just do profile analysis. And they're great. No other platform in the world does multi-time frame splitting and arbitrage. I know this because we did a long-standing due diligence process, and in order for us to code what we did, we started from the basics, and we spent 2 years working our way up for multi-time frames. In fact, we were just contacted by some institutional companies that are looking to integrate our levels into their services. So you can understand, you know, that's a pretty big opportunity, especially from a retail trading perspective, when you got some bigger companies that are, you know, bigger traders, and, you know, they see what you're doing, right? It has a lot of merit. Gerald's saying, what platform can you use? Thinkorswim, Sierra, Ninja. Right now, the levels are designed only on Ninja from a platform perspective. We do have plans in the future to export the levels to a server for a signal service. We do plan on sending these to our app. So we do have a mobile trading app, and we are adding these levels to your mobile app. So if you're interested in having the trade locations on your phone, you'll be able to install the app and you know, apply for data packages. Then ultimately, we are going to be looking to export the levels to a server-side server so that you trade the locations, and if you are trading on other platforms. But right now, you need it on Ninja. Yeah. Yeah, these charts run on Ninja, Jerry, and you'll need, if you execute, you could execute on another platform, or you can just move to Ninja, right? If you were interested in trading the system, right? Yeah, if you have Ninja, then this is the reason we use NinjaTrader, guys, is from a graphics perspective. We've coded 2/3 of our entire product line for TradeStation. We do have plans to move the other remaining indicators over. We're just waiting for our developers to get back from vacation, and we're going to map out the jobs. But you know, we do have plans to try to make it compatible with TradeStation. The reason we use Ninja is due to the code language, the flexibility that Ninja provides around development. I mean, it's the best platform in the world for custom coding. I mean, that's just the way it is, right? For custom algorithms, Ninja's the hands down the best platform in the world. And I know that because I employ developers. Now, if you want to go web-based, that's different, but will you be adding an upgrade to the VM system for plotting the pattern structure? You mean the structure reversals, Rob? For plotting the pattern reversals? No, we're actually creating a pattern signal generator that relies on 6 different pattern rotations for mapping out the risk and reward on the locations. It'll be added as an add-on for a signal generator, because the momentum is just momentum. It has nothing to do with the price structure, because every indicator has price structure in it. Yeah, look for the release of that. That's coming down the pipeline. We're also building a signal generator for the Delta Force system that integrates into this, so that we can look at, you know, creating buy and sell signals directly for the Delta hooks. So we've got some really great upgrades coming and really good enhancements to system add-ons, but this is the bare bones, the meat and potatoes, the must-haves is what we've got today. Okay. So SM's asking, how can I get more training information about how to use Market Profile? Very powerful. There is a learning curve. Let me show you what's on the inside of the subscription. So let me share this with you guys. So when you come to our company as a school, and this is important that you understand this, okay? There's a trading room, okay? And then there's software, right? You can buy indicators independently, or you can buy systems under the bundles, okay? Today is a system webinar. We're teaching the market profile system, okay? When you become a member of our trading room, or if you buy one of our systems, you get access to our trading room. So let me just go in here for a second. When you go to the futures trading room, when you get access to our trading room, I've always believed in exposure for traders. I'm a firm believer that if you're going to be with us and you're going to trade with us, you can't just buy a trade room subscription and then have to buy an education course and then have to pay for a trading system. You need to have the education in one. So what we do is you get the live trade room plus the educational portal plus the strategies, all for a monthly subscription. Okay. Now let me explain something. When you go into the education room, this is a very extensive training environment. Introduction to futures trading, converting our time frames, core concepts on levels and market structure, market and volume profile section for all of the profiles, right? Big extensive training, trade management tools, order flow, auction and momentum, the business of trading, personal development, system add-ons. And then what happens, okay, is you get into the strategies course, okay, and there's all the levels. The profiles levels, there's the first touch entry, the delta flip, the confirmation, and the trend trade. You get to learn the trading systems that our systems produce, and then you can pick the entry that suits you best. We do have other scalping systems that are used and trade management videos on every single entry. So there is a lot of education that comes with just the trading room. So you're not just getting 3 hours every day with me in the live rooms. That's only going to be useful to you if you have the system and you're watching the training. Okay. So if you go in here, the trade room comes for free, guys, when you're buying the system for 3 months. After that 3 months, we have packages that allow you to upgrade, and I'll show you here, just so you understand the cost of the trade room after and all of the training. Is there's this, we run monthly, 3 months, and 6 month subscriptions. And that's not just the trade room, guys. That's the trade room, the education, and the strategy section. So once you have the system, you just become a part of our community and then trade with us ongoing. It's a lot of value, and it's an opportunity for you guys to come in and trade with us effectively. Okay. So been running a poll now for a while. Thank you for those of you that entered. You wanted contacting information. If you have any questions, for those of you that are still on the fence and you've got a case of the yeah buts and the what ifs, I get it. I respect it. In fact, I I would rather you do your due diligence and come into the trade room and watch what we're doing, ask questions, and then follow up with us than to invest in a system that you're not sure of. And that's as easy as I can get, right? It's as transparent as I can get. Remember what I said at the beginning of the event. My pledge is very simple. I want to teach you what we do with all of our traders. If this is something that you resonate with, you're in the right environment. Okay, guys? So I want to thank you for your time. I enjoyed being here. We'll put the recording up for you guys to watch via email. And if I didn't get your questions answered or you want to get in touch with us, don't forget to join me tomorrow morning in the trade room. And the guest pass ends this Thursday. So you still got Wednesday and Thursday to come in and trade with us. And then you've got the rest of the week to go over the system and the details and when the opportunity for you to get that bundle savings ends. Okay, guys? So thanks again, traders. Thank you for being here, and we'll see you tomorrow morning bright and early for some more active trade. Take care, guys.